Unlock today's market moves with our comprehensive review of detailed candlestick signals for October 1st, 2025. In the next few minutes, we'll deliver a full market snapshot, break down precise candlestick structures across major sectors, and provide actionable insights on the bullish and bearish patterns shaping the market. We'll pinpoint key sentiment indicators and reveal which sectors might be undervalued, all to help you make more strategic decisions. Today's session opened with notable volatility as macro policy, uncertainty, and sector rotation impacted the major indices. The Dow Jones Industrial Average, the S&P 500, and the Nasdaq Composite all moved lower from the opening bell, driven by investor caution in the face of fresh economic data. The early morning sell-off saw indices hit their lows around 10:30 a.m. Eastern Standard Time. However, major benchmarks showed mixed momentum heading into the close, with defensive and technology-oriented stocks displaying relative strength in the final hours of trading to pair some of the initial losses. For October 1st, 2025, the most frequently measured candlestick durations for our analysis were the 15-minute, 30-minute, and daily timeframes. High-volume sectors like technology and healthcare featured prominent daily bullish engulfing patterns, signaling a strong reversal from intraday lows. Meanwhile, defensive and cyclical segments showed lower timeframe structures, including doji, hammer, and bearish engulfing candles, reflecting the session's uncertainty. The daily candles provided the principal signals for our directional analysis, confirming intraday volatility with notable trend reversals and powerful continuation formations. Distinct candlestick signals today indicate a cautious, trend reversal-heavy market. The technology sector displayed clear, bullish, engulfing formations on the daily charts, signifying renewed buying momentum that erased early losses. A bullish engulfing pattern forms when a large green candle completely engulfs the prior day's smaller red candle, suggesting buyers have decisively taken control from sellers. This was led by companies like Microsoft and Nvidia, which both witnessed sustained upward pressure from strong fundamentals in AI and cloud growth. In the healthcare sector, hammer patterns were widely observed. A hammer is a bullish reversal pattern that forms after a price decline. This looks like a hammer, with a short body at the top and a long lower shadow, indicating that sellers pushed the price down during the session, but strong buying pressure returned to close the price near its open. This was backed by positive news flow in biotech, particularly from firms like Amgen and Merck, following promising clinical trial updates. Conversely, the financials and energy sectors exhibited bearish engulfing and hanging man patterns, reflecting profit-taking and heightened sector risk aversion as the day progressed. Let's dive deeper into the sector and industry highlights. Our first sector is technology, which remains a focal point for investors. The most common pattern observed today was the bullish engulfing on the daily time frame. The sector saw a significant influx of capital in the afternoon, erasing morning losses to close with a 2.1% gain, which translates to a market capitalization change of approximately $120 billion. Despite this strength, the sector remains overvalued based on historical metrics, with continued rotational interest concentrated in high capitalization AI chip makers like Nvidia and Microsoft. Moving on to the healthcare sector, we observe dominant hammer and bullish engulfing structures on the daily frame. The sector is currently rated as fairly valued to slightly overvalued. With sentiment clearly rising on the back of biotech innovation, healthcare posted a solid gain of 1.8%, adding about $75 billion to its market capitalization. Strong buying interest in names like Amgen and Merck helped fuel this positive performance, as investors responded favorably to pipeline developments. Next, let's look at communication services, where patterns like the Morning Star and 3 Outside Up appeared frequently on the 30-minute and daily frames. The Morning Star is a 3-candle bullish reversal pattern that signals a bottom, often appearing after a downtrend. This sector is currently undervalued by an estimated 14%, presenting a potential opportunity, particularly in the telecom subsector. Large-cap names like AT&T and Verizon are showing signs of bottoming, contributing to the sector's modest gain of 0.9%, or a $30 billion increase in market cap. The consumer cyclical sector painted a different picture. Frequent bearish engulfing and doji formations on the daily chart signal widespread profit-taking and valuation concerns. A doji, which looks like a cross, indicates indecision between buyers and sellers. This sector remains marginally above fair value, but key industries like autos and travel are considered undervalued by market capitalization. The sector ended the day down 1.2%, a market capitalization loss of around $55 billion, as investors grew cautious about discretionary spending. Finally, in the financials sector, bearish patterns were dominant. Notably, the bearish engulfing and the hanging man on the 1-hour time frame. The hanging man is a bearish reversal pattern that appears after an uptrend and suggests a potential peak. Many financial stocks are statistically overvalued, and we're seeing lower confidence in industry leadership. The sector shed 1.5%, wiping out nearly $90 billion in market capitalization as risk aversion took hold. To summarize today's action, here is a comparison of the major candlestick formations. For the technology sector, the most common pattern was the bullish engulfing on the daily chart. With a bullish to bearish count of 15-5, though it remains overvalued, healthcare showed hammer and bullish engulfing patterns, with a bullish count of 11-4, and is considered fairly too overvalued. Communication services featured morning star and 3 outside-up patterns, with a strong bullish count of 13-2, and is notably undervalued by 14%. Consumer cyclicals was bearish, with doji and engulfing patterns giving a bearish count of 10-5, and financials were clearly bearish with engulfing and hanging man patterns, resulting in a bearish count of 12-3. Overall, broader market sentiment remains cautious, characterized by defensive posturing and selective sector leadership. The prevalence of distinct candlestick patterns underscores the momentum-driven nature of today's market and confirms shifting outlooks. Technology and healthcare are maintaining their bullish momentum on the back of innovation and earnings strength, but face valuation headwinds. Meanwhile, the communication services sector is clearly signaling undervaluation and potential upside, backed by bullish reversal patterns. Conversely, the financials and consumer cyclicals sectors reflect the growing macro pressure and overvaluation risk that is worrying investors. Here is a final summary of today's key sector movements. The technology sector was led by the engulfing pattern, with Microsoft and Nvidia as cap highlights. The healthcare sector saw the hammer pattern dominate, with Amgen and Merck standing out. Communication services featured the morning star, with AT&T and Verizon showing potential. The consumer cyclical sector was defined by the doji, indicating indecision around stocks like Ford and Marriott. Lastly, the financial sector was weighed down by the hanging man pattern, with JP Morgan and Bank of America reflecting weakness. Today's candlestick market review illustrates significant transitions in sector leadership. Paying close attention to these candlestick formations, especially on the daily time frame, provides a robust method for interpreting trends and price action. By using this analysis, market participants can more efficiently target undervalued opportunities, like those emerging in communication services, while avoiding overheated segments that are showing clear signs of exhaustion. Thank you for joining us for this market breakdown. Subscribe for more daily insights and analysis. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, and subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes, and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.